From Business Insider again. Jim Rogers correctly predicts gold would fall to 1,200, and now he thinks it could go as low as 900. It's going to read it directly. That's M-A-N Mita Badkar, probably somebody from India. The price of gold peaked at just 1,900 per ounce in the fall of 2011. And it was right around that time that commodities guru Jim Rogers began warning investors that the yellow metal could hit a low of 1,200 before the sell-off was over. He was right. Gold prices entered a bear market, down 20% from its height in April, and on June 27th, they touched 1,200. In a phone interview this week, Rogers explained to us how he arrived at the 1,200 figure. He also offered an outlook for gold as he continued a complicated bottoming process. Business Insider, 2 years ago, you told us you could see gold hitting 1,200. How did you arrive at that? I'm sure it was all based on an intuition from Business Insiders, but gold has been at that point 11 or 12 years in a row, which is an anomaly. There we go. There's when gold took off, right in here, and it's been up. And this shows what it's doing. Okay, let's keep going. I don't know any asset that's gone up 12 years without a down year, and gold needed and deserved a correction. And if it's going to happen, where would it go? 1,200 was between 35 and 40%, and 35 and 40% reactions are commonplace. So that was the first number. I wish I could tell you I had a formula. I'm not sure we found the bottom yet. It would make a lot of sense for gold, having had 12 years up, to have at least one longer consolidation, a longer correction, maybe a few days, a few weeks, or a year or two. Why not 2014, 2015? My view is that gold is in the process of making a complicated bottom, which could take a while. So I'm not buying gold. I haven't sold any gold or silver, but I'm not buying any. I'm watching and expecting a new low, which might be lower. Okay, let's zoom in. How far is that back? Let's go back 3 years. Okay, more of that later. Business Insider. Were there other things you were watching for that made you think gold prices would fall? Emerging market demands, or perhaps the Fed? There are lots of mystics who were convinced that gold was holy, that gold could not go down, that gold had to go up. And that's the reason I think gold hasn't made its final bottom yet. It's because there are still lots and lots of mystics. People who tell me gold cannot go to 1,200. I say open your computer and you'll see it is 1,200. Don't tell me it can't happen. Many people think it can't be happening, or that it's being manipulated, and that all sorts of excuses for not going on. Or for what's going on. You know, when you have people that are faithful or true believers, you usually don't hit a true bottom until most of these people get washed out. I suspect that that is still to come. I don't think many of the true believers have sold their gold yet. Business Insider, do you have any guesses to how long it would take to reach a bottom? I wish I was that smart. I don't really know it could happen. I don't really know. It could happen before 2014 or 2015, but the bull market is not over. Gold is going to eventually make new highs. It seems that there may be another. It's because it had these 12 years without going up. I don't know anything in investment history that has gone up 12 years without a declining year. That may be something I just don't know of. There may be something, I just don't know it. What drove gold prices higher for 12 years? That's a very good question. Another question could be, what caused it to go down finally? What caused it to go up 12 years in a row was a 20-year bear market. Gold had collapsed starting in 1980 and went down for over 20 years. It went down substantially. So when you have a long extended bear market like that, everybody sells out. Mines close, mines open, and lay the foundation for a nice long bull market. And that's what happened to gold after a 20-year period of real despair in gold. Then you can have a nice long bull market. And yes, 12 years is a long time, but it's nowhere near 20 years. the foundation has been built for a long-term bull market. Then it was driven by the fact that there are a lot of money printing in the world. We have a lot of debt, a lot of crisis around the world, so there are all sorts of psychological reasons all around the world, not just in America, for people to buy gold. Now, what caused it finally to go down? And as much as I love India and Indians, they're the largest buyers of gold in the world. And India has a huge balance of trade deficit. The largest drivers are oil and gold. You don't do anything about oil, so the Indian politicians are blaming their problem on gold. And they've taken many measures, and more measures are coming to diminish or even eliminate the import of gold. I'm not the only person who saw that. They're pretty much loud about it. That's the main catalyst, or the straw which broke the camel's back, which made gold start going down finally, after 12 years of going up. And the foundation has been built for over 20 years, and many, many fundamental things have come together. But then after 12 years of a bull market, more mines started opening, more gold mines were forming, and then the Indians said, among others, but mainly the Indians said, we're going to stop all this. And by the way, the French have certainly come out with measures that you cannot buy more than anything in cash for more than, what's that, 1,000 French money? What's the French money? A mark? French mark? 1,000 marks to limit the purchase of gold. The Germans, no, it's the franc, excuse me. One of those days. The Germans are also taking measures to make it more difficult to buy and sell gold. You have a lot of governments coming together with measures against gold and silver, but especially Indians. The Indians, and the Indians are the largest buyers. All these things come together after 12 glorious years because the correction is worse than it would have been otherwise because of the 12 years. So it all fits together what could happen. What is happening, what will happen in gold, I am not selling gold, but even though it may take a couple of years, more complicated base building, I finally expect the bull market to end, in a bubble someday, and someday is not here yet. Is there anything else our readers should know that we haven't asked you? I am not selling my gold. I'm skeptical, even though I would expect gold may go down even more to 1,000 to 900. A 50% correction would be 960 or whatever it is. Now 50% corrections are quite normal in markets. What's not normal is something to go up 12 years in a row. So it would be normal if gold would correct 50%. That might go somewhat towards shaking out the faithful, some of the mystics. We've got to shake more people out. I don't see any signs that the faithful, they're being worried about what's going on. But I don't see any signs yet that the faithful are giving up and selling their gold. That's just verbal despair. Not just people talking about despair, but people acting. Then the gold prices will make a nice firm bottom. Well, here we go. Peter Schiff, gold is on the verge of its biggest rally ever. So there you go. There's a believer. There he is, right there. Once again. This guy. Buy gold, buy gold, buy gold, buy gold. I've talked about him before. Okay, there's the chart. That's a big drop right there. You can barely see it. Let's look here. Look at that. You had top at 1900. Yeah, that's about a 40% drop. Well, I like this here. This down here, this McCAD, there's a lower low. Even though this is way lower than this. It's much higher. So yeah, I think we're, look at the weekly. So wait a minute, there's this 1200. Where is this 1200 at? Yeah, it's still, wow. There's not a whole lot of resistance till about right here to 950. So yeah, that 950 is quite possible. There's not a whole lot of resistance. And this has really went down. That is a sick chart. Very sick. Sick as they come. Look at Bollinger Band real quick. Look at that. Man, look how much it pierced the Bollinger Band. I guess I'm going to get a lot of compliments, a lot of comments that this was triggered by the Fed and they're short sellers and Goldman Sachs or some assholes are behind it. I don't know. All I know is that is a shitty looking chart. That's all I know. Bye-bye.